day. Ira Epstein of Linn & Associates with your SPDR ETF video for this Thursday, the 21st of January, 2021. And the time right now, well, we're pushing 5:40 p.m. Central Time. So a mixed day. You can see it on the board, but a lot of red. More red than anything, I think, on the board. And we can see that we're entering a bit of a correction. We saw different things going on in stock indices. They were higher. IWM, well, you've been seeing pressure in the Russell. Energy, sort of flat to a little bit lower. XBI, which are the biotechs, they were down today. So let's go to that and start right there with the biotech. This is a hot subject because everybody's getting the COVID shots and so on. The market has had a nice run up. Now, there's a phenomena that often happens. You always got to be careful. At year end, markets tend to do certain things. You ran up into December, had an early January break, and then ran up and made new highs as of yesterday. And suddenly the market's letting go to the downside. What's that all about? Well, what it's about, simply put, is that you now have a higher high and a lower low. You stepped out of a trend on the swing line. We'll talk about why now. You've been over the 18-day average, so the bias is to the upside. You've got your 100 and your 200-day moving averages way under the market. They're still support numbers. The question is, did the market run into something? And it did. It ran into the friend called the Bollinger Band, that algorithm where resistance points get placed on the chart. And that is what you ran into. And with it, the market decided to let go. Now, when I look at momentum, I have been telling you for the past week, this is an overbought market. You can see the readings. It's been doing that. It got overbought. Actually, it started, to be honest, right here. This is the day it got overbought. A week ago Wednesday, not yesterday, a week ago Wednesday. And as it kept coming up, I said, be careful, you're overbought. There's your resistance point. Checked it out, and today you let go. So you've cut through all that. That's all it is. Got to let that work itself off. Overbought conditions do one of two things. They either drop out of being overbought or they embed. Embed occurs when you get overbought and then both numbers start going over the 80 sideways and they stay that way. When they eventually lose it, it is a sign that momentum to the upside has been lost. Where you go back ideally to the 18-day average. And the flip-flop is true in a bear market when you're under 20. When I look at SMH, here's a classic example of embedded bullish market. That tells me I think the pros are going to buy this market on pullbacks until the red number breaks under 80. The market is respecting the upper Bollinger Band. It's not trying day after day to stay above it. It hits it, drops back, lets the pros in, and they move accordingly. Eventually you get caught in the trade. You know, when momentum ends before price typically, not all the time, typically. And when that occurs, you're going to give back some change. But until it's over, it's, it's like anything. If you've been to Vegas, you push your bet until it doesn't win, right? But you got to know how to take money off the table, too. Very important. Betting in Vegas, I have friends that do it. To them, not a guy like me. It is a science. I have friends that are poker players for a living. Yeah, for a living. And they make a great living. I mean, it's a numbers game to them. They're playing percentages. One of my friends that does it was a commodity trader. And I understand he's quite good at it. So you look at this, the industrial sector. If you saw that, that's about you. Lower highs, lower lows. You can see the market back to the 18-day average of closes. Momentum pushing to the downside. Why do I want to be involved in that? I'm not bearish, but I'm certainly not in the bull camp. I'm neutralized. In XLE, I've been telling you I'm not in love with the energies at this price. Futures have been doing some things that have been bothering me. They went back to embedding the past 48 hours, but tomorrow's the all-important EIA report. We normally get that this morning, Thursday mornings, but between the Martin Luther King holiday and the inauguration, it got pushed back to Friday. We'll see. The API number was bearish yesterday. That did come out. We got nothing today. Tomorrow we're going to get the natural gas numbers and we're going to get the EIA numbers on distillates, gasoline, and crude stocks. Right now this market is saying, I want to correct. here's a market that was embedded. You can see that. The numbers were all going sideways over 80. When you lose it, now watch. You lost it right here, and that is today. Unless it gets it back right away tomorrow morning, and watch this chart at 9:30 a.m. Central Time, because that's when the EIA number comes out. See how it reacts. But unless it gets it back right away, the odds favor this market's going back to that 18-day average of closes. In the NASDAQ, you've got an upside breakout. Why? Because on both of these days, you closed in the day's top quadrant, back to back, and over the upper Bollinger Band. So until you take out right here, this level, I think that the pullbacks in the market, when and if they come, will be buying opportunities until something changes. The market is overbought as can be. Just because you have a breakout does not mean you jump into the market, but I respect the fact that the market is trying to push on that upper Bollinger Band out, and that means the FANG stocks have come alive, and gee, aren't their earnings due now? EFA. You've had a higher high, lower and low pattern in this market. It's a son of a gun. It's overbought. I don't see anything right there. I'm certainly have an upside bias to it, but I'm not seeing anything clear. Gold market got up high enough yesterday on Wednesday to negate the downtrend. It's proving that that 200-day average is still a value moving average. By that I mean there's a lot of traders that look at longer term averages, and the first time you hit them, if you've been above them for a long time, they'll buy them. If you've been under them, they'll sell them on the way up. And I think it's going to have resistance if it can continue up right into that 18 and the 100-day average of closes. Unfortunately, it's not a trend. You have a lower and low, higher high. So I'm an observer. Gold miners getting pulled along the same way. You've got a higher high and a lower low, no follow through, and I'm going to call it for the resistance at that 18-day average to the 200-day average right above it. TLT, the market is oversold. It's been under the 18-day average since the beginning of the year, so the bias is still down. And these have been mini rallies to the upside that really haven't carried one way or the other. Last in FXE, I am looking for a reason for this market to start turning itself around. We saw the European Central Bank today. Ms. Lagarde came out. They kept everything pretty much as it is. They're going to keep their bond buying programs in place. They'll do more if it's necessary. She's very aware that the COVID vaccine is not getting distributed in the manner that they were hoping for throughout Europe. UK's one of the examples where it's doing better with that, and there's concern. So the bank's aware of it, but the market's not breaking on that news. The market is still looking over that bad piece, that they'll get it under control, and there's going to be plenty of loose money. They're going to keep interest rates low for at least another 2 years, they're talking, and that's benefiting that particular market. So that's how I'm viewing that. You know, I talk about all this and more daily, and now I'm putting out my morning update. I don't know if you know that I switched my ETFs. I start recording them at 8:40 a.m. I want the markets to open, and once they open, I start recording. I need that 10 minutes to put in the daily numbers. I record, and I go through 41 charts right now. I'm going to give you short-term trades, swing trades. Swing trades can last weeks, they can last days. They're not meant to be day trades. The only time a short-term trade happens on my work is if the buy and the sell, in whatever order it happens, come together, or a stop order, and I'm taken out of the market. Got it? So it either goes my way instantly, and wow, what a great trade. I was wrong, I want out. That's the only time. Everything else is meant to be a little longer. And then I give you on the weekend, on Saturdays, I record the weekly charts. And on those weekly charts, all I do is the weekly part. You get 6 videos a week. We're talking an average of 20 minutes of video, and I make them easy to get around. You can go from sector to sector and see what's going on there. I invite you to write me and tell me what you'd like to be covered. I will do that. I give you the news of the day in the morning. That's something I wasn't doing that well. Now I've got it because I'm doing this at 8:40 in the morning. Most U.S. reports come out between 7:30 and 9 in the morning. And that's all the markets I cover, all those different sectors. How do you get this? It's simple. Come on, clear up for me, and let's see if it'll do it here. You just go to our name. I don't know why that happened. It's www.iraepstein.com. www.iraepstein.com. Go to the word research. It's all there. Not expensive. A tick in many markets. Not even that, okay? Why not give it a try? See if this fits into your style of trade. I'm Ira. You have a good day. I'll see you tomorrow.